been a long time since I had Dr. Anas Alhajji on one of these spaces. I think this is going to be a very timely discussion. I made the name of the space a little bit dramatic, the risk of an oil super spike, but I do think that that's something that people are legitimately concerned about, so we're going to tease that out. And with all that said, my name is Michael Gayed, publisher of the Lead Lag Report. Join me if they are with Dr. Anas Alhajji. Dr. Anas, it's been a while, but for those who are not familiar with you, introduce yourself. Who are you? What's your background? How'd you get involved and interested in the oil markets? And what are you doing currently?
Hello, Michael. For those who are attending today and they don't know Michael, I do admire Michael for two reasons. He is a chief marketer. So I think I've seen only very few people with those capabilities. And I do admire everyone who have a hobby and they go all the way for it. And he's done that with the music. So these are the two reasons for the admiration. Michael, how do you want
to? But can I just say, real quick. I appreciate that. What I will say is that I do believe I am a good marketer. I also believe that I know what I'm doing when it comes to what I'm marketing. But as a side note, I'm always amazed at how that's almost seen like it's a negative. I don't care if you're an outright salesperson or not. You have to be able to know how to communicate and sell, whether you're in an organization trying to get a promotion, trying to sell your skills, or trying to get a job, or whatever it is. Everybody has to know how to communicate properly, and that's really what sales is. So anyway, I appreciate that.
You're welcome. Generally speaking, I wear several hats right now. Historically, I've been an academic, and then I moved to the private sector. I used to be the chief economist for a premier private equity, which is NGP Energy Capital Management, known in the market as Natural Gas Partners. It is part of the Carlyle family right now. We historically, it was the biggest, really the biggest private equity in the market. We focused on oil and gas, pipelines, etc. Of course, with a good focus on shale, Canadian oil, but not the oil sand, of course. That's the cold flowing oil in Canada. Very familiar with the companies, etc., in Alberta. Right now, I wear several hats. One of them is producing those Substacks, one called the EOA, that's Energy Outlook Advisors newsletter. And the other one is the Daily Energy Reports for those who are subscribers and here today. Thank you very much. I will talk about this later on. At the end of last year and the beginning of this year, we made 23 projections on the oil and gas markets, energy markets, and we were spot on each one of them, literally on each one of them. And I will go over this later on. Of course, we have our own failures. I will go over that too. But to speak about the current situation, this year, 2023, is the year of records in the energy markets. And what we mean by that, I'm going to give you some examples. I cannot go over all of them. But this could be a surprise to some of you that U.S. tight oil production, which includes shale, is at record high. Yes, we did hit record during the Biden administration. So that's at a record. China's crude oil imports hit a record recently. But again, as we explained in the article that we posted yesterday, we got to be very careful with this data because there are other sides to the story. But literally, China imported the highest amount of crude ever. And not only China. Here is another surprise. The EU, the 27 countries that form the EU, they imported the most crude ever, despite the penetration of electric vehicles and despite the recession in some of those countries. In today's Daily Energy Report that we are going to post this afternoon, we discuss this in details with some charts, and we explain that one of the reasons, and this is the irony, one of the reasons for this increase are the subsidies provided by the governments to fossil fuel. Another record production in Canada, record oil production in Brazil, record U.S. natural gas production, and here is another one. Record U.S. LNG exports. So it is the year of records. So that's one part of the story. The other part of the story is when the IEA, that the International Energy Agency, start talking about lower demand, and lower demand not only for oil, but for fossil fuel in general. I do hate this term, but I'm going to use it because it's very common. They are expecting a decline. Basically, it's a peak in demand by next year. And the issue here is the IEA, the Biden administration, and others do not realize this fact. If you are worried about national security, you are worried about security of energy supplies, you don't talk like this. The IEA is entrusted with the energy security of its members. And now when it goes out and tells the world that that's it, oil demand has peaked, or it will peak soon, how do you think the Saudis will react? How do you think OPEC members will react? How do you think the oil companies will react? The first reaction is, if everyone believes, or most people believe what the IEA is saying, do you know what? The Saudis will go for the highest price possible in the oil market. So you want to talk about the spike that Michael mentioned? It is caused by the IEA. Not only because of lack of investment, because they've been scaring investors in recent years, but because of the reaction of the producers to the IEA rhetoric and the nonsense. So when they say that oil demand is going to peak, they are just telling others, this is your last chance. This is the last bull market ever. So take your chance, do whatever, get your money, and run away. So the most dangerous thing that's happening to the oil market right now is the IEA, literally. And we do have a serious problem with the IEA. I will tell you a story, and you can track it and check it and Google it and look at the numbers. The IEA was telling President Trump that the U.S. is going to be energy independent and shale production is going to increase year over year, and it will be the growth is going to be so substantial that it will take over the world. So they use the term explosive growth in shale production. The moment President Trump lost the election and Biden won, they immediately changed their tone and they started talking against oil. They start talking about the energy transition, the green energy, etc. Why? Because the U.S. is one of the largest supporters financially of the IEA. So they are after the money. And we got to see if Trump or any other president along his lines win the next election, how they are going to change their tone again. Now they are predicting this, but look at the recent announcements by several countries, including the IEA. We have COP28, that the climate summit that will take place in Dubai in the UAE at the end of November. Everyone is going to go there looking good with their agenda. Everyone is going to show that they are doing their best. And I am here at the table. And since I'm doing the best, you got to listen to me. So everyone is trying to bring their narratives, and they want their narratives to win. And that applies to everyone. This is the first time, basically, oil companies are joining, by the way. And the oil companies are going there. They want to show their green credentials. Saudi Arabia and other OPEC members, they want to go and show their green credentials, because if they want to be at the table, they want to influence the discussion. The only way they can influence it if they show that they have green credentials. And that applies to anything they do in terms of renewable energy, hydrogen, ammonia, nuclear, and production cuts, because that leads to lower emissions, etc. They want to show lower consumption, higher efficiency. They want to show all of that. So everyone is going there, showing their credentials so they can influence the narrative. It is our belief that this COP28 could be historic because the narrative will be changed. And the European narrative that we've been hearing about in the last 15 years or so has proven to be a failure, and no one wants to apply it, even the European countries, because the European governments reneged on it. They went back to coal. They want to go back to fossil fuel. And accordingly, their own oil majors reneged on all their promises. So the narrative is changing. And based on that, I would like to mention 2 points here. The first point is the IEA is going to go there And the investors are really frustrated. Several governments are really frustrated. Why? Because they said, look, we spent trillions and trillions of dollars. And how many trillions? I mean, like, imagine this, that the spending since 2011 until now was in trillions. And yet renewable energy in the total energy pie of the world is only 17%. About 10% already exists before. So we paid those trillions only for the 7%. Anyway, the idea here is because investors are frustrated and governments are tired of paying money for no results because fossil fuel consumption continue to rise while emissions continue to rise too without showing any results, the IEA has to show that, look, we won because oil consumption is going to decline, natural gas consumption is going to decline, coal consumption is going to decline, and therefore emissions are going to decline. Just wait for me until we pass this year. But there is no evidence of anything they said last week. No evidence of that at all. But it is very clear that investors are frustrated and they try to send kind of a message to investors, just spend some more and stay with me and we all will be fine. But the fact is we are hitting records on everything, including CO2 emissions. The other point related to this is we've seen reports, especially from Bloomberg BNF and others, saying that the fossil fuel basically has peaked, and along the idea of the IEA, and renewable energy basically is taking over, etc. Here we have a serious problem. It's just like Enron accounting system. It's exactly the same. If you have a country or countries in a recession, the sun and sun rays are not function of the economy of the countries. The wind is not a function of the economies of the countries. They are the function of natural events that are not related to how you are doing economically. So the wind will blow, not blow, etc. regardless. The sun, the same thing. It will either we'll have a sunny day or no sun. And therefore, renewable energy production or generation will stay the same whether you have a recession or you don't. But what changes with the recession is fossil fuel consumption. If you have a recession, it declines. If you have economic growth, it goes up. So what those guys did basically is they used the fact that those countries are in a recession. The US economic growth basically is very weak. China is in trouble. And they took the numbers and they run away with it. And they say, look, we extrapolate and look, the fossil fuel is going down and renewable is going up. Well, you cannot do that with a recession because when you have a growth, all that energy needed for the growth, all of it is fossil fuel, all of it. So we got to be very careful when we read those reports. A final comment before I take other questions, and I repeated this in various podcasts and TV interviews, etc. We got to be careful with anything we see because the data quality in the energy market is terrible. It's got worse and worse. And I mean, we've never seen this terrible data in years. Probably this is the worst time for data in probably 70 years or so. And this is coming from all over. For example, we have the dark fleet from Russia, dark fleet from Iran, dark fleet from Venezuela. That's all. And we are talking about, of course, the largest black market in oil in history, in the oil. We never seen this before. So the data deteriorated heavily on this. The other issue is, look at the EIA, that's the U.S. Energy Information Administration. For those who are familiar with the oil market, they know the term adjustment, which is the difference between the estimated supply and estimated demand. We wrote several reports on this. For those who would like to learn, they can go to our Substack and read about it. But the idea here is this adjustment been getting higher and higher, and then the EIA promised that it already solved it because they found out now in 2023 that blending is taking over, and therefore we are blending natural gas liquids with oil, with crude, and then when we export them, all of that is classified as crude, and that messes up the data. In 2023, after 90-day investigation and spending a lot of money. They discovered what we wrote about in 2017. We told them in 2017 exactly what they discovered in 2023. The issue here is the data quality is not only globally. I mean, look at Iran basically decided to hide its data and not submit it to OPEC. Russia decided not to publish any data about its production. In China, we don't know anything about its demand. Any articles or news reports you see about Chinese demand, basically, we call it implied demand because we have to calculate it. So we don't know that. So you add all of that together, we have a serious problem with the data, and it's very hard for us to kind of try to figure out what's going on in the market. I will leave you with this thought about the adjustment at the EIA. The United States basically can fire a rocket to hit its target precisely on the other side of the world, but cannot solve an accounting problem at the EIA. Back to you, Michael.
Okay, so there's a lot of different directions we can take this, but going back to the year of records, do you suspect that more records are going to be made? I hear you on the idea that the IA basically is saying this is the last run, so take advantage of it, and that's why prices are rising. But presumably a lot of those imports, a lot of demand has also been pulled forward. And if the yield curve is right, and you have a recession that could be deep at some point next year, that seems like a pretty nasty combination for oil prices actually going the other way, meaning a sizable drop. Am I thinking about that correctly, or are there other dynamics?
Yeah, basically, in case of a recession, you are absolutely correct. But here, I would like to emphasize the point that the existence of a recession does not change the medium or the long-term outlook. I mean, we are talking about super spike here. We are heading for energy crisis. It is a fact that if current prices will last, let's say, for a year or so, the crisis will get smaller and smaller as we go, because current prices are going to stimulate production worldwide and is going to curb demand growth, especially with the fact that the dollar is very high and oil is priced in dollars. But it is very clear, the way we are going right now, we are not going to have enough supply for the future demand. And therefore, we are going to end up with energy crisis. We are not going to see prices like $300 and $400 like some people are talking about, simply because we end up with demand destruction. But we end up with very high prices for an extended period of time, even if we end up with a recession beside the recession that you are talking about. So we have a serious problem in the future. And that problem is stemming from two facts. The first one is, and please, for the listeners, pay attention to this. If you look at all the outlooks, long-term, medium and long-term outlooks in the market today, the most famous of them are the International Energy Agency, OPEC, and the oil majors. Imagine this. What the IEA and OPEC publishes in terms of outlook is a representative of the wishes of the governments. It does not mean that they can do it. Because if the government of Germany submitted a plan and laws, etc., to the IEA, and they are a paying member, no analyst within the IEA is going to criticize the policies and tell them, oh, by the way, you cannot do that because I already went to a seminar last week and I found out this technology basically is not viable. No one will say that. They will take Germany's word as is and put it in the outlook. So the outlook that you see from the IEA historically are just the wishes. And then they decided to stop. So there are no more outlooks out of the IEA, period. All we are getting from the IEA is what if scenario. What that means is what it takes to achieve carbon neutrality by 2050. And then they answer that. They are not suggesting that this is what's going to happen. They are not predicting that. This is just a what if scenario, kind of pushing the limits on that. As for OPEC, it's the same thing. They are just representing the wishes of what they are getting from the government. No analyst is going to criticize it and adjust the numbers. So they are useless. We need independent analysis, and we don't have it. We have only few. As for the international oil companies, we have the outlooks from Exxon, NA, BP, etc. Imagine this. Those companies produce several scenarios. And then a committee will sit down with the leadership of the company and decide to pick up the scenario they are going to invest according to. And that will be top secret. No one will know it. No company is going to tell others about their secrets. And then they will sit down and decide with their own PR committee which scenario to use and give the public. So governments can look at it and the public. It's a scenario basically mostly kind of looking green, et cetera, et cetera. So that scenario that is public is completely useless. Don't even waste a minute on it, because they are trying to literally brainwash you into something. They just want to look nice with it. And we do have enough evidence to look at their published outlooks and look at their investment, and they are completely in a different direction. So those outlooks, everything you see out there basically is really not representative of any true analysis. And based on this, what we did at Energy Outlook Advisors, basically, we did, like we've been working on this for several years. The outlook basically is oil demand will continue to grow at a lower rate, yes, but it will continue to grow. The problem is, since all the forecasts and all the planning and all the investment is being done based on what the IEA and others are talking about, we are going to have a gap. And we have another gap coming from the failure of some of the green policies, because if you have a failure of a green policy, then you need a substitute. What is the substitute? There is no substitute except coal, gas, and oil. And therefore, the demand for oil, gas, and coal in the future is going to be higher than all the expectations in the market today. And that's going to create the super spike.
Okay, I want to go back to China, which you mentioned, and that's your most recent post, and the nuances around imports on the surface, should be very bullish given how important China is to the global economy. And we all know that China economically is in bad shape. They might try to reverse it, but there's a lot of headwinds against China. Lay out just some of the things that you wrote about in that most recent piece, because I think this is interesting. Whenever I keep hearing about record imports of oil, my mind immediately goes to national security, right? That there's some other reason, if it's not just demand, right? Which with China in particular has been faltering. But talk through that for a bit.
Yes, we have a serious problem, and that's why we published a long report on China that we made available free, so people can look at it. They can just check my Twitter feed and they can find the links. And then we posted something new yesterday. The first point is we have to distinguish between demand and consumption. Consumption or demand is consumption plus build-in inventories, which means that when they import oil or produce more oil, so demand is higher than consumption in this case. Sometimes it's the opposite. But for China in particular, people looked at the imports, and imports were increasing, and they thought, wow, the Chinese economy is roaring. But we realized since December last year, and this is in our outlook, and this outlook is available free too. We realized since that time, and we said, look, 2023, and that's since December, 2023 is the tale of two halves. And the first half is going to be weak, and the second half is going to be bullish. The fourth quarter is going to be very bullish. And that's written for those who want to see it since that time. And the issue that we faced was most of the imports that China brought in, especially from Russia, went to inventories and strategic petroleum reserves. So that's not consumption. So their inventories went up. And one of the failures of our outlook basically is we failed to see that. We were not able to believe. I mean, even when we looked at the data, we were shocked to see that China is building their SPR and their inventories. We did not count on that. But we are certain, and based on the analysis, the charts and the data are all in the report, that the Chinese are going to use their inventories to prevent prices from rising or probably even pushing them down. Their history is very clear. The chart is there for everyone to see. When we looked at the recent data, the Chinese crude imports, crude and condensates, reached record high. That's very bullish. But when you look deeper, it's not that bullish, and probably not bullish at all. We don't know, because we still need more data probably for the next for 5 weeks to figure it out. Why? First, we've seen a shift in sources of imports. That's very strange. Very strange. All of a sudden, back to Saudi Arabia, who raised their prices. They are back to Iraq, back to the UAE. There is something fishy here, which means that it could be a blip or could be a new trend, but we got to find out what's going on. The second thing is their exports went up, and all of a sudden, their inventories started going up again. Again, someone might say this is weekly data changes, etc. But the coincidence of this weekly data of all of these things happening worth looking at. So the idea here is, yes, they had record high imports, but at the same time, their storage is getting higher and their exports is getting higher. And by the way, their exports in the next 4 months are going to go through the roof. And that's mostly petroleum products. So yes, it looks at the surface that's very bullish, but looking at the details, it may not be that bullish.
It doesn't sound to me, and maybe I'm misinterpreting this, but it doesn't sound to me like you think that the risk of a real spike further from here is that high. I understand more intermediate and long term, but in terms of kind of the very short term, oil prices have been pretty steady and unrelenting on the upside, which is stoking fears again about a reacceleration of inflation. You think that continues into the end of the year, or is a lot of this already pulled forward?
All the indications that high prices, not necessarily, I don't want people to understand the 94 and the 95 we are talking about. Anything above 85, basically, is going to continue to the end of the year. In fact, that brings us to our earlier forecast in the energy outlook, in the 2023 oil market outlook. And I mentioned earlier that we had 23 predictions and all of them turn out to be true. Everything you see today, if you read that outlook, and again, it's available free for everyone to read, you'll be really impressed that we predicted all of this. So we are predicting that the second half is going to be tight. Oil prices will increase. The fourth quarter is going to be tight. However, because in the last 2 months, because of the Chinese inventory build, we are less bullish than before, but we are still bullish on the fourth quarter. But if you don't mind, I'm going to go over some of the items that we hit or were spot on in the outlook that we posted in January. We said that oil production will not decline. Russian oil production will not decline significantly. Remember, at that time, we had people talking about a decline of 3 to 5 million barrels, including the International Energy Agency. Our estimates for 2023 was the decline will be an average of 600,000 barrels a day. We are spot on, even on the number. We mentioned at that time that OPEC members will buy Russian oil. They did. We failed on the fact that their imports were fourfold of what we predicted. We said that China, India, and some OPEC members will import Russian crude and re-export it as products legally. They did. We said that the G7 EU price cap will not work, and we emphasized that point. And in today's news, we are writing this in the daily report. In today's news, the Russian crude in Chinese ports today is sold at premium to Dubai and Oman. Sold at premium, no discount, at premium. That means the price cap was useless, has no impact. We mentioned, this is among the big hits that we had, was China's opening has limited impact, especially in the first half. We also mentioned, especially in the December report, that OPEC and OPEC Plus has no choice but to cut output in the first half. OPEC did not listen. They did not. Then prices declined significantly. And then they had to go back and start cutting in March. That's a different story for a different time. We also mentioned that while OPEC needed to cut, OPEC and OPEC Plus cannot agree on a cut. And therefore, we were the first one to say that they will go for voluntary cuts. They did. The whole idea of what OPEC and the Saudis want basically is based on one idea. They want to flip the contango to a steep backwardation. And the whole analysis basically is available on the web for that backwardation. And that's really how they are able to control prices. We mentioned that the ending of monthly meetings announcements was a mistake, and it was a mistake. And now they are returned to announcing it monthly. For the last month, they announced it for the next 3 months. We believe that is still a mistake. We said that U.S. shale production will hit a new record. It did hit a new record. We said that shale companies will switch from areas with high percentage of condensates and gas to crude with API lower than 45. They did. Of course, the list is long. I'm not going to spend time on it, but I'll mention this important point. The increase in spending on renewable energy in 2022, especially in Europe, is not a new investment. This is a very important point. They just forwarded future investment to 2022 because of the Russian-Ukraine war. What that meant, basically, and we mentioned that at that time, that investment of renewables will decline in 2023, and it did. And of course, there are other things too, but it takes time to mention all of that.
I had an audience member post in the thread asking for your thoughts on nuclear. Uranium plays actually the last several weeks have done well, this week in particular. Any thoughts on nuclear broadly as it relates to oil and energy dynamics?
Yes. There is no way we can achieve even a small percentage of what we wanted to achieve on climate goals without nuclear. And I think many experts agree on this. There is no way. So that's number one. Number two, we have a realization right now in the United States and in several European and other countries, including in the Middle East, that they need a nuclear. Now we have 4 countries in the Middle East basically are looking at nuclear. As you know, the UAE already built and operated their 3 reactors. Now we have Saudi Arabia, Egypt, Algeria, and Morocco. All of them are building nuclear plants or planning to build nuclear plants. Why? Because they realize by 2035 or after, if they don't do it, we are going to end up with a major shortage of energy. We are not going to have enough. And renewable energy basically is not going to solve the issue as some people have claimed. Renewables are not going to solve this. They cannot replace this. I mentioned earlier about the trillions of dollars that been spent since 2011, and we got only 17% of total energy in renewable. Renewable is not going to solve it. The only way we can at least prevent a major energy crisis is to go for nuclear. The other point related to this, people have to realize that the issue is so important and so significant even to governments, to the extent that despite the sanctions on Russia, the EU and the US is still importing enriched uranium from Russia even today. That's how important it is.
I'm curious to hear your thoughts on demand and maybe some of the dynamics as it relates to India, which seemingly everyone now is focused on India as the major economy that would eventually end up maybe even overtaking China as far as overall global importance. Where are we with the records and India's responses to oil prices?
When it comes to India, India is the perfect example that proves everyone on the far left to be wrong. Everyone. And if you look at the data, you look at everything we see in India, there is no way India can grow, and that applies to Vietnam, by the way. There is no way they can grow, even with nuclear, building more nuclear without coal. About 70% of power generation comes from coal today. That has several implications because you have some states in India that are 100% dependent on coal in power generation. And the government, under pressure from the Europeans, they are trying to promote electric vehicles. But those electric vehicles are really coal vehicles. And a study being done by the IIT, that's a very respected Indian research institution, they found out that the emissions from electric vehicles in states where they depend heavily on coal is higher than gasoline and diesel. In a sense, what you see in India just proves some points that the people on the left do not want to acknowledge. But this is a fact of life. That's number one. Number two, when you have a growing economy like the one in India, and you have people who are basically going to urban areas, because let me clarify this point. People thought historically that there is a relationship between growth in population and energy consumption. That is not correct. The relationship is really between urbanization and energy consumption. So you move people to cities and their energy consumption just goes through the roof. And the problem here is there is no way back, which means that if the man gets fired from his job, even with no income, he is not going to go back and live in the village again. He's going to stay in that apartment with the high energy consumption. And here I would like to mention some numbers so people realize what is the impact of urbanization and why the IEA is wrong on its forecast of the decline in or the peak in fossil fuel demand. When the Biden administration brought in tens of thousands of Afghans from Afghanistan to the United States, the energy consumption of every family, the moment their first day in their apartment here in the United States, their consumption of energy increased by 70-fold. 70-fold. Those immigrants who are coming from Central America to the United States, the moment they are in apartments in the United States, their energy consumption increased by 30-fold. The Ukrainian immigrants who are leaving Ukraine to the EU, their energy consumption increased by 4-fold. Where is the problem here? If energy consumption is growing and you are building renewable energy, you are barely meeting demand, and therefore there is no replacement. You are not replacing coal. You are not replacing natural gas. You are just barely meeting future demand. So urbanization, when you talk about India, urbanization is the biggest driver. And that's going to last probably for the next 3-4 decades. And energy consumption is going to increase substantially. So even if India goes in full throttle on renewable energy, their coal consumption may not decline. Their natural gas consumption may not decline. But if they don't build enough renewable energy infrastructure, then the demand for coal and natural gas will continue to increase. By the way, the use of oil in India in power generation is less than 1%. So any build in renewable energy in China, India, OECD, including the United States, Europe, has no impact on oil because oil is rarely used in power generation. But to go back to India, India is a big story. But the problem with India right now is that we have a nationalistic government. And with a nationalistic government, you end up with flip-flop policies. You end up with problems with other countries. And therefore, when we talk about BRICS and others, etc., and having other currencies, etc., you cannot have that when you have nationalistic governments. So yes, India is the biggest story, but the existence of a nationalistic government is going to be the main obstacle of many things. The bottom line is this, that forget about BRICS currency, that single currency, forget about it. We might see just some increase in trade in local currencies, but we found out, and we have enough evidence to prove this point, the trade in local currencies basically means one thing. It's one-way street. It's the renminbi, the Chinese renminbi. It's not the other way. So you're not going to see people trading in the Brazilian real, for example, or the Indian rupee. It's going to be literally the yuan for any of those trade deals. But when it comes to oil, oil is priced in US dollar. Getting revenues in non-US dollar is very common. And it's an old story, by the way. So we have to distinguish between pricing oil in dollar and getting revenues in non-dollar. Oil worldwide is still priced in US dollar. Someone might say, hold on, we have the Shanghai exchange where oil is literally exchanged for renminbi, for yuan. Well, we did the analysis and we found out that the price in yuan on the Shanghai exchange is a mirror image of the exchange of Dubai in dollar. So you are adjusting for exchange rate and the geographic location and the quality differential. That's it. So it's just a mirror image. So oil is still priced in dollar any way you look at it. In terms of getting revenues in non-dollar, yes, we've seen this increasing in recent years, especially for Russia and others. But the loss is still small, and the dollar is still dominant. And the story here is, if you just look at what India, Saudi Arabia, and the U.S. announced at the G20 meeting about those corridors through the Arab world all the way to the Mediterranean, etc., it just shows you that the U.S. still have many choices. And the reason why countries are shying away from the dollar is because of the sanctions, and some people call that the weaponization of the U.S. dollar. So it's still, everything's still in the hand of the United States in this case. From pure academic point of view, we still need to see a single big country shying away from the dollar and it has no sanctions on it. Because that's where you start talking about, seriously, about the ditching of the dollar. But if every single country that is trying to shy away from the dollar has sanctions imposed on it by the United States, that tells you that it's the U.S. trade policy that is causing this. It's not really them trying to get out of the current financial system. But you can go back to that, or you can just search my name and type dollar. There are many videos on this in addition to the articles on Substack. Historically, since the 70s, when the what so-called experts try to build models, they estimated the global oil demand based on behavioral variables. And then they estimated non-OPEC production based on behavioral variables. And they assumed, since OPEC is a cartel, based on their review, of course, I don't believe it is a cartel, that OPEC will supply always the difference between the total global demand and non-OPEC production. So OPEC will always supply that difference. That is called the call on OPEC. And the models that have been built in the 70s, they are still in use until today, which is a big mistake. Our models basically are completely different. But the IEA, EIA, and OPEC are still using those old models. So the call on OPEC is always the difference between total global demand for oil minus the supplies of non-OPEC. If you chart that, you will find out that what OPEC forecast is right now for the call on OPEC versus the actual production of OPEC is about 2 million barrels. 2 million barrels a day. What that means is inventories have to decline by 2 million barrels a day. And that's not the case. So either the forecasts are wrong or there is something wrong. And if they are correct, if the IEA and OPEC are correct in their demand forecasts, then inventories have to plunge in a way that we never seen in history, of course, and that will lead to skyrocketing prices and probably a global recession. As a result, we know that OPEC does not want a global recession. We know OPEC does not want to go to COP28, or I'm talking about all OPEC members. They want to go to COP28 where everyone is screaming and yelling at them. So it is not in their interest, basically, to have this major decline in inventories, and therefore they have no choice but to increase production. Again, the assumption here is the IEA and OPEC estimates of global oil demand are correct. We believe they are not correct. We believe global demand is lower, but we still have a few months to the end of the year, so we'll see who is correct. Since 1998, OPEC been communicating with Russia, 1998, trying to cooperate. And Russians never cooperated. Finally, in 2016, they had this deal with OPEC where they have the OPEC Plus. But Russia never followed through with its promises. And we've seen that on March 5, 6, and 7, 2020. We've seen it beforehand when everything collapsed. Remember when prices, we woke up on Monday the 9th and prices just plummeted. That was a horrific day for people in the oil market. Why? Because of the dispute between Russia and Saudi Arabia. The Russians did not follow. There is a long story, probably we'll dedicate a whole show for this, on why the Russians were concerned. And I will mention this quickly and then I'll revert back to the story. The U.S. knew long time, even from the Obama years, Republicans and Democrats planned since that time that they wanted to take advantage of the shale revolution and replace Russian gas in Europe. And that's why all this push toward LNG. President Trump was marketer in chief of LNG. And here we have a government from the opposite side, the Biden government, and they are doing exactly the same thing Trump did, promoting LNG in Europe. So the plan basically to replace the Russian gas was already there. And guess what? Putin knew since 2014, after the annexation of Crimea, that shale is the biggest threat to Russia's market in Europe. And they knew through their analysts that that gas is coming from oil wells. It's not coming from shale wells, from shale gas wells. It's coming from oil wells. It's coming from West Texas. And we talk about Russian analysts, by the way, go back to all the consulting firms and check all the Russian employees in them. I know I'm going to poke some eyes here, but this is really kind of really frustrating when you start thinking about it. Anyway, so they realized that the biggest threat is the associated gas that comes with oil. And therefore, the Russians always objected to cuts within OPEC Plus. Because, yes, and you can see all the articles on the web and search them, that they were really against shale. It wasn't the Saudis against shale. It was the Russians. Why? Because if oil prices go above 65, they know that shale is going to produce more oil. And by association, it will produce more gas. And gas prices in the United States will collapse. And that will stimulate LNG exports and the building of LNG projects. So that's why the Russians basically were objecting the Saudi efforts to cut production. But the idea here is the Russians never followed through. And the Saudis got frustrated with that. So they followed a policy of a carrot and stick. The carrot basically is, okay, I'm going to cut my production by 1 million barrels a day. The stick, put 11 VLC tankers that each one of them is 2 million and above barrels in the Suez Canal, just ready to be dispatched at any moment. You are talking about almost 22 to 23 million barrels that will be dumped on the market within a few days. And they can send more. And they put them in the Suez Canal where they can be visible from satellites and everything else. Everyone can see them. Why it is important to put them there? Because the Russian government changed its pricing system, and now it is, changed their taxing system where it is dependent on the price of Brent. And how to hit Brent? Well, you hit Brent when you flood Europe. And therefore, you put those in the Suez Canal ready to go to Europe. You don't put them in China. So we've seen after that, you've seen the Russians start cutting. But recently, we've seen them playing a game. And the game that's being played within OPEC for a very long time. And listen to this carefully, because for those who are not familiar with it, I need to speak slowly and explain it. There is something called crude oil, and there is something called condensates. Condensate is like very super light oil, but it's not classified as crude. There is a measurement called API that's coming from the American Petroleum Institute. Anything that is below 50 or below 45 is classified as crude. Anything above that is classified as condensates. OPEC and OPEC Plus quota is based on crude only. It does not include condensates. So if the cutoff is 50, that means any API below 50 is part of the quota. But governments can play the game and say, by the way, this is condensates, this is not crude. So what we saw recently is when the Russians promised the Saudis to cut 300,000 barrels a day to the end of the year, all of a sudden we've seen their condensates go through the roof by exactly 300,000. So the Russians continue to play their games. As I said earlier, the whole idea here is that if the demand numbers or the demand estimates by the IEA and OPEC, and they stand firmly by them, by the way, if they are correct, then OPEC has no choice but to increase production. Based on our numbers, which is way lower than them, the increase in production is way lower. They will increase production, but remember what the Saudis promised. They will do the cut only for 3 months, which means that we still have 1 month at the end of the year. We don't know what they are going to do with it. And they may decide if prices go up substantially, they might decide to do that earlier. But the idea here is, again, if the demand numbers by the IEA and OPEC are correct, OPEC has no choice but to increase production. We believe they are not correct. The increase in production that should take place is very small and is kind of like manageable. We do have that in the charts in one of the articles, if you'd like to read it and look at the charts and look at the numbers.
Again, everybody, please make sure you follow Dr. Anas Alhajji. It's a great space. I'm always a big fan of listening to Dr. Anas. Please make sure you sign up to his Substack as well. This will be an edited podcast under Lead Lag Live on Apple, YouTube, and Spotify. And hopefully all of you will be back next week. Thank you, Dr. Anas. Always a pleasure.
Thank you very much. You all have a great day.
Cheers, everybody.